The number one investing question that I get asked all the time, someone says, hey, I want to get started in the stock market. I want to start making money. Which is the stock that I should buy? In this video, I'm going to answer that question and share with you the number one best investment that you should make in the stock market and how to make a guaranteed 10% return. Let's face it, people want to get involved with the stock market to make money. We're not making charitable donations to these companies by buying stocks and not expecting anything in return. We want to invest in the stock market, put our money into it, and hopefully get more money out of it. So that's why I want to share with you the number one investment. You don't need any prior knowledge. You don't need knowledge of how to pick the right stock, how to read charts. This is the most simple advice that I'll give you of where you could put your $100, $500, $1,000 to get started in the stock market and get a guaranteed 10% return. Before I give this advice, I have to give this disclaimer saying that I am not a financial professional. This information is just for entertainment purposes only. Also, don't just listen to random guys on YouTube giving stock tip advice. It's always important to do your own research. So you're probably wondering, what is this magical stock tip advice that I'm going to give you? Is it Amazon? Is it Tesla? No, it's not any individual stocks. In my opinion, individual stocks are very risky, and a lot of people don't have the knowledge or skill set to pick the right stocks. And if they do pick the right stock, as soon as it goes down a little bit, they panic sell. And so that's why I don't recommend for people to buy stocks if you're just starting out in the stock market. What I recommend are ETFs, or exchange traded funds. What an ETF is it's a group of stocks put together. This way it won't go down a lot, it won't go up a lot, but it will have an upward trend. And the number one stock market advice that I recommend for anyone getting started is going to be the S&P 500, which stands for Standard & Poor's 500. Basically, what the S&P 500 is it stands as the benchmark for the entire stock market. If we look over the past history that the S&P 500 has been around, it's been yielding a guaranteed 10% return average historically over the years. Of course, some years it's higher than 10% return, some years it's lower than 10% return, but over the course of many years, it's been given a 10% return. Basically, what the S&P 500 is it's a group of 500 different stocks, 500 of the best and largest companies in the US that are profitable. Basically, these companies are Apple, Facebook, Google, Amazon, among hundreds of other companies that are constantly yielding profits quarter after quarter, month after month, day after day. So if you invest in the S&P 500, essentially you're investing in all 500 of these companies. And it won't drop a lot unless we have a dip back in March 2020 where the entire stock market just went down for a little bit. It's unavoidable. Every stock pretty much went down no matter how good the company was. Besides that, the S&P 500 won't drop a lot. The reason why is because if there's any poorly run companies that are maybe going bankrupt or not yielding the best results for the S&P 500, the S&P 500 will just replace that company with a better company. And there are certain standards for these companies to follow in order for them to be part of the S&P 500. So it is definitely the best of the best of the best. When you invest in the S&P 500, basically you're hitting a single, to give a baseball analogy. You're not hitting a home run. It's not like finding Amazon at $500 and investing in it and then selling it off at $3,000. You're not going to hit a home run by investing in an ETF or the S&P 500. It's basically a safe, conservative way to have your money grow over years and years. So if you have 5 years, 10 years, 30 years before you want to touch your money, if you invested in the S&P 500, over those years, you're going to get an average of 10% return. By the way, I'm David, and if you're getting any value out of this video so far, hit the like button down below and subscribe to the channel if you want some more wise money tips to build a wealthy future. If you want to learn how to make money, manage money, and invest money, definitely subscribe to the channel. Now that you know what the S&P 500 is and the benefits of it, I'll teach you how you could actually invest your money into it. Whether you have $1, $10, $100, doesn't matter how much, I'll show you how you can invest in it. So if we take a look here, the S&P 500 is actually an index. It's an index fund, as I mentioned, of 500 companies. So to invest in it, it would cost you $3,527 if you just wanted one piece of the actual S&P 500. As I mentioned before, an ETF, which is an exchange traded fund, you could get a version of the S&P 500. So if we jump into my Robinhood account right here, if you just type in SPY, and that's the ticker symbol of this ETF, you could purchase it on any brokerage account you have, Webull, Robinhood, it doesn't matter what you have, you could purchase it right here in any account. By the way, if you wanted to get 2 free stocks, you could sign up through Webull and get 2 free stocks valued up to $1,600. Or if you want a 3rd free stock, you could sign up through Robinhood. I'll have links to that down in the description below. But if we look here, if we look at the S&P 500 ETF, which is SPY, we could see if we type in the 5-year, it's constantly going up. So 5 years ago, it was around 200, and it's been slowly going up and up and up. We had the dip in March of 2020, and I'm filming this October 12th, and we're pretty much at an all-time high right now. So as you can see, over many years, it's just gonna constantly go up and up and up. And the price of this is $351. And if you don't have $351 to invest in SPY right now, what you could do is something called fractional shares. So if you have a Robinhood account, as I mentioned, there's a link down below, you could sign up and you could purchase $1 worth of SPY or $5 or however much you want to invest. If you're wondering how much should you invest, invest however much you're willing to lose. Not that you'll lose it in this, but you don't want to take out this money anytime soon. If you want it to grow, you got to keep it in there and let it grow years over years, or a few months, weeks, it doesn't matter. It's your money. You could do whatever you want with it. So right here, I'm going to invest in dollar amount. So you could either do shares. So if you were to buy 1 share, it would cost you $351. If you were to do it in dollars, let's just say I only have $10 to invest. So it's 0.02 shares that you would get if you were to invest $10 into it. So I'm going to click review order, buy, and there we go. I just bought $10 worth of SPY, and that's how you could buy this one-time investment. And if you were to keep it over years and years, you would get a 10% return on it. And what that means, to keep numbers simple, if you invest $1,000 into it, a 10% return will give you $100. If you invest $10,000, 10% return will give you $1,000. So let me know down in the comments below, what is your #1 stock tip or ETF tip that you recommend for people to purchase? Is it SPY? Is it something else? I would love to know down in the comments below. And if you want to watch some more investing videos, I highly recommend clicking this playlist right over here. I go over the 5 tips of how to get started, the way that I've been able to make $1,000 a month through the wheel strategy. It's all in this playlist right over here. Click that now, and I'll see you in the next video. Thank you so much for watching. Have an amazing day.